Emirates isn't just big, it's record-breaking big. In the financial year 2023 to 2024, Emirates Group, which includes the airline and its dnata ground services arm, achieved record revenue and profit. Group revenue hit 137.3 billion Emirati dirhams. That's about $37.4 billion US dollars. To put that on a ladder, imagine stacking $100 bills until you reach 37 billion of them. Emirates did that in 1 year. The group's profit was equally staggering at 18.7 billion Emirati dirhams, $5.1 billion US dollars, up 71% from the prior year. This profit was the highest in Emirates history, yielding a 14.2% profit margin for the airline, an exceptional figure in an industry where profit margins often sit in the single digits. These headline numbers translate into concrete scale. Emirates carried 51.9 million passengers in 2023 to 2024, 19% more than the previous year, and more people than the entire population of Spain. On average, that's over 140,000 travelers per day, trusting Emirates to get them across the world. To serve this demand, Emirates operates a fleet of 260 wide-body aircraft, as of March 2024, comprising the world's largest fleets of Airbus A380, Super Jumbos, and Boeing 777 long-haulers. The average Emirates aircraft is 10 years old, which is relatively young for long-haul jets, a testament to continuous renewal. All of these planes are big. Emirates famously doesn't fly any small jets. It's an all-wide-body fleet, optimized for carrying as many passengers as possible on each flight. In terms of capacity, Emirates is back near pre-pandemic highs. The airline's total capacity, passenger and cargo combined, reached 57.7 billion ATKMs, available ton-kilometers, in fiscal year 2023 to 2024. For a passenger-only view, Emirates' seat capacity grew 21% that year, and the airline managed to fill 79.9% of those seats on average, a load factor just shy of 80%, indicating very strong demand. That means on a typical Emirates flight, 4 out of 5 seats are occupied. In total, Emirates passengers traveled tens of billions of kilometers. If we imagine those trips as one giant voyage, Emirates effectively flies hundreds of millions of passenger kilometers around the globe annually. Financially, Emirates' scale shows in more than just revenue. Consider its cash reserves. The group ended the year with 47.1 billion Emirati dirhams, $12.8 billion US dollars, in cash assets, the highest ever. It's a war chest that many airlines could only dream of, and it provides a buffer for future growth or shocks. The group's workforce swelled to 112,000 plus employees worldwide, from pilots and cabin crew to engineers and ground staff. That's larger than the population of some small cities, all working to keep Emirates running 24/7. In short, by the numbers, Emirates is immense. 51.9 million passengers a year, 260 wide-body jets, $37+ billion in revenue, and $5 billion in profit. It's one of the top 5 airlines globally on many metrics. But how did one airline in Dubai achieve such scale? The answer lies in a powerful engine, not just the engines on its planes, but the strategic engine of its business model and location. Emirates' growth was no accident. It's propelled by a unique engine combining Dubai's geography with a purpose-built network strategy. First, Dubai's location is a geographic jackpot for an airline hub. Roughly 2/3 of the world's population lives within an 8-hour flight of Dubai. Think about that. From Dubai, an Emirates plane can reach Asia's megacities, all of Africa, most of Europe, and even parts of Australia in under 8 hours. It's almost ideally situated at the crossroads of Europe, Asia, and Africa. For long-haul travel, Dubai often sits conveniently along the way. This means Emirates can connect virtually any 2 major cities on Earth with one stop in Dubai. The airport's slogan of being at the axis of the world's fastest-growing population centers is no exaggeration. Dubai's geographic advantage translates into a massive catchment for Emirates. By one estimate, 5.7 billion people live within an 8-hour flight of Dubai today, a number expected to rise to 7 billion by 2030. That's a virtually limitless well of potential travelers passing through Emirates' hub. It allows Emirates to function as a super connector. Passengers from, say, India and Southeast Asia can connect in Dubai to Europe or North America, and vice versa. Dubai lies along the great camel routes of modern aviation, bridging east and west with minimal detour. This geography is the necessary condition for Emirates' model. But geography alone isn't sufficient. How Emirates uses Dubai's location is the real key. The airline has engineered a finely tuned hub-and-spoke network at DXB, Dubai International Airport. Emirates operates a banked hub system, meaning waves of inbound flights arrive, passengers connect, then waves of outbound flights depart. In fact, Emirates runs 4 distinct banked flight waves per day through Dubai. For example, early morning flights from Asia land in Dubai around 5 to 6 a.m. Passengers connect, and by 8 to 10 a.m., a departures bank launches those travelers onward to Europe, Africa, and the Americas. Later in the day, the pattern repeats with other regions. This coordination maximizes the number of one-stop city pairs Emirates can serve. At its peak, Dubai's terminals brim with connecting travelers during these banks, a carefully choreographed ballet of jets on the ground. The payoff is huge. With just one hub, Emirates can offer hundreds of viable route combinations, e.g., Mumbai-Dubai-New York or Cairo-Dubai-Sydney. By timing flights to meet in Dubai, Emirates turns its network into a giant mesh connecting 151 destinations via Dubai in a single stop. To make this work, Emirates leverages operational precision. The airline maintains a minimum connection time around 75 minutes for most itineraries, pretty tight for long-haul transfers, enabled by efficient ground handling and dedicated terminals for quick transit. Dubai Airport is designed as a mega connector, wide-body gates clustered in concourses with sprawling lounges and amenities for through passengers. Emirates even built Terminal 3 exclusively for its operations, one of the largest airport terminals in the world, to streamline this flow. During peak banks, dozens of Emirates jets line up on final approach to DXB, and a couple of hours later, a parade of departures takes off to all corners of the map. This banked hub model does sacrifice some aircraft utilization. Planes may wait for the next bank, but Emirates accepts that trade-off to offer maximum connectivity. The result is a powerful network effect. The more destinations Emirates serves, the more appealing the hub becomes, attracting yet more traffic. The second part of Emirates' engine is its all-wide-body fleet and high-capacity strategy. Emirates made a bold choice early on. It doesn't fly small planes. Unlike most airlines that use a mix of narrow-body jets for short hops and wide bodies for long flights, Emirates employs only large aircraft, chiefly the Airbus A380 and Boeing 777. This gives Emirates enormous capacity per flight. A typical Emirates 777-300ER carries 350-plus passengers. An Emirates A380 can seat between 484 and 615 passengers, depending on configuration. For example, their flagship 4-class A380 layout has 484 seats, including first, business, premium economy, while a 2-class high-density A380 squeezes in over 600 seats for leisure routes. By comparison, many airlines operate 787s or A333s with 250 to 300 seats on similar routes. Emirates simply sends a bigger jet. This scale per flight yields crucial advantages. First, it lowers unit costs. Spreading fuel burn and crew costs across more passengers reduces the cost per seat. Emirates can thus offer competitive fares and still turn a profit, as long as it fills those big planes. Second, high capacity lets Emirates absorb the huge volumes of connecting traffic through Dubai. In many markets, Emirates doesn't just fly daily. It often operates multiple daily flights with A380. London, for instance, sees 6+ Emirates A380 flights a day, each with approximately 500 seats, offering thousands of daily Emirates seats into that market. The strategy is clear: consolidate traffic from many feeder cities onto one large plane, rather than operating many smaller planes point to point. Emirates effectively created scale economies by funneling demand through one hub and one type of large aircraft. There's also a customer experience edge to this approach. Wide-body jets like the A380 offer spacious cabins, room for amenities, showers, onboard lounges, and a smoother ride, reinforcing Emirates' luxury brand image. The A380 in particular became synonymous with Emirates' identity. They operate over 100 A380s, far more than any other airline. These giants became flying billboards for Emirates service. In 2023 to 2024, Emirates A380s served 49 destinations worldwide, from New York and London to Los Angeles, Sydney, and beyond. Flying a 500-seat double-decker plane into so many cities is itself a statement of scale, one that often prompts airports to upgrade facilities. Dubai even helped partner airports build A380-ready gates early on. Emirates turned the A380 into a profit machine by deploying it on high-density long-haul routes connecting through Dubai's hub, where they could reliably fill the seats with global demand. Critically, Emirates has maintained high load factors on these big birds. Even as it ramped capacity, Emirates kept its system-wide passenger seat factor around 80%, meaning it sells the vast majority of seats. This is where Dubai's geography and Emirates' network feed into the fleet strategy. By casting such a wide net for passengers, they can indeed fill an A380 from, say, Bangkok to Dubai, with connecting passengers continuing to Europe or Africa. The airline's brand and product also create pull. Travelers seek out Emirates for its reputed service, helping keep those planes full. The synergy of location plus network plus large aircraft yields an efficient engine of growth. It's often said Emirates doesn't have a domestic market, but in truth, its domestic market is the world. By tapping into global traffic flows and concentrating them onto large jets, Emirates creates a scale economy moat that few can easily replicate. It's one thing to fly millions of people. It's another to make money doing it. Emirates excels at both. Let's break down where Emirates' money comes from and how its operations turn a profit. The bulk of Emirates' revenue is from passenger services, with a significant contribution from cargo and additional income from its global ground handling and catering arm, dnata. In fiscal year 2023 to 2024, the Emirates airline, passenger plus cargo, accounted for roughly 86% of the group's revenue, while dnata contributed about 14%. In numbers, dnata's revenue hit a record 19.2 billion Emirati dirhams, $5.2 billion, meaning the airline's revenue was on the order of 118 billion Emirati dirhams, approximately $32 billion. Passenger transport is by far the largest slice of that. Emirates carried nearly 52 million travelers and earned 89% of its airline revenue from passengers, with the remaining 11% from cargo. Even within passenger revenues, Emirates optimizes its yields. In 2023 to 2024, passenger yield, average fare per passenger kilometer, was 36.6 files, 10.0 US cents per RPK. That was actually 2% lower than the previous year due to a different mix of routes and cabins, hinting that as the network expanded, more economy or shorter routes slightly diluted yields. Nonetheless, Emirates made up for lower yield with higher volume, hence the record revenue. Importantly, Emirates maintained a strong seat load factor of 79.9%. High load factor plus decent yield equals strong revenue generation. Many airlines face a trade-off between filling seats and raising fares. Emirates has generally managed both, filling seats through global demand and keeping yields healthy with a premium product that people pay extra for. As we'll see in a moment, Emirates' cabin layout strategy, first business premium economy, helps lift the average fare. Cargo has been a quiet hero for Emirates in some years. Emirates Sky Cargo, the freight division, carried 2.2 million tons of cargo in 2023 to 2024. Everything from electronics and textiles to COVID-19 vaccines. This was an 18% rise in tonnage, as more passenger flights meant more belly capacity for cargo, and Emirates even leased additional freighter aircraft to meet demand. However, cargo yield, revenue per ton kilometer, fell by 32% as the pandemic freight boom subsided. Consequently, cargo revenue came in at 13.6 billion Emirati dirhams, $3.7 billion, about 11% of Emirates airline revenues. During the pandemic, that share was much higher, as passenger flying dropped and freight rates spiked. Now cargo is normalized, but it's still a significant business. Moving goods provides a steady revenue stream and helps utilize aircraft belly space efficiently. Emirates' global network and large wide bodies are ideal for cargo. An A380 or 777 can carry tons of freight in addition to passengers. Notably, Emirates operates 11 dedicated Boeing 777F freighters as well, and has more on order, underscoring that cargo is part of its diversification. Now, what about costs and profitability? In fiscal year 2023 to 2024, Emirates benefited from some favorable wins. Fuel, traditionally its largest cost, was a bit cheaper. The average fuel price was 18% lower than the previous year, which helped offset the increase in flying activity. Even so, fuel spend was massive. Emirates' fuel bill was around 34.2 billion Emirati dirhams. The prior year it was 33.7 billion Emirati dirhams, and with more flights in 2023 to 2024, it would be higher. But crucially, Emirates manages fuel via hedging to smooth out spikes. Meanwhile, other costs like labor and maintenance rose as operations ramped up. Emirates Group's total operating costs increased, but revenue increased more, so profits swelled. Emirates Airlines' profitability in 2023 to 2024 was astonishingly high. The airline division earned 17.2 billion Emirati dirhams, $4.7 billion in net profit, up from 10.6 billion Emirati dirhams the year before. That's a 62% jump. This gave the airline a 14.2% profit margin, the best performance in the airline's history. A 14% net margin is rare in aviation. It speaks to Emirates' strong cost control and high demand. For context, many legacy airlines are happy with 5 to 8% margins in good years. Emirates more than doubled that. We should note Emirates has some structural cost advantages. No domestic taxes on jet fuel in Dubai, lower corporate taxes, and historically, support from the government in infrastructure. Still, these results are outstanding by any measure. They indicate that Emirates' model of long-haul, high-volume connecting traffic can indeed be very profitable when executed at scale. Breaking down revenue streams, passenger revenue is buoyed by Emirates' success in selling premium cabins. A significant portion of Emirates' revenue comes from first and business class passengers, even though they are a small fraction of the seats. We'll explore this more in the next section on cabin economics. Ancillary revenues, like onboard sales, extra baggage fees, etc., and partnerships, e.g. code shares, its frequent flyer program Skywards, also contribute to the top line, though Emirates doesn't nickel and dime customers as aggressively as some low-cost carriers do. Emirates focuses on a quality product to earn loyalty and willingness to pay. And then there's dnata, the group's third pillar. Dnata provides ground handling, catering, and travel services, not only in Dubai, but at airports around the world. In 2023 to 2024, dnata's revenue soared 29% to 19.2 billion Emirati dirhams, and it earned a healthy 1.4 billion Emirati dirhams, $387 million profit, a 330% jump from the prior year. dnata's profit margin, approximately 7%, is lower than Emirates Airlines, but it still adds nicely to the group's bottom line. Notably, dnata has expanded internationally. 75% of its revenue now comes from outside the UAE. This means Emirates Group makes money even from servicing other airlines at many airports. It's a diversification that insulates the group somewhat. If one region's travel slows, dnata in another region might still do fine. To truly grasp how big Emirates is, it helps to compare it with other leading airlines. Emirates likes to call itself the world's largest international airline, and by some metrics, that's true. Let's put Emirates side by side with a few key competitors and peers: Qatar Airways, Singapore Airlines, Turkish Airlines, the US Big Three American, Delta, United, and Europe's large airline groups like Lufthansa Group and IAG. We'll compare size, passengers, fleet, revenue, and see where Emirates stands. First, the Gulf rivalry. Qatar Airways is often mentioned in the same breath as Emirates. Both run globe-spanning networks via a Gulf hub. Qatar Airways, based in Doha, is indeed a heavyweight, but Emirates is larger on most counts. In its latest fiscal year, 2023/24, Qatar Airways carried more than 40 million passengers, a record for them, but still well shy of Emirates' 51.9 million. Qatar's passenger load factor hit 83%, actually a bit higher than Emirates' 80%, showing strong demand. In financial terms, Qatar Airways Group made 6.1 billion Qatari riyals profit, approximately $1.7 billion on 81 billion Qatari riyals revenue, approximately $22.2 billion. Emirates, as we saw, did about double that revenue, approximately $37 billion, and triple the profit, approximately $5.1 billion. Qatar's profit margin was around 7.5% versus Emirates' 14%. Both good, but Emirates was on another level. Qatar's fleet of approximately 250 aircraft is slightly smaller and includes some narrow bodies, through its partner airlines, whereas Emirates' 260 jets are all larger wide bodies. So in the Gulf cage match, Emirates is the bigger player, roughly 1.3 times the passengers, 1.7 times the revenue, and 3 times the profit of Qatar in the most recent year. Both are growing, but Emirates' head start and Dubai's larger traffic base give it the edge. What about Singapore Airlines, SIA? Singapore Airlines Group, like Emirates, is renowned for premium service and a hub-based model through Singapore's Changi Airport. In its latest fiscal year, FY 2024/25, SIA Group carried a record 39.4 million passengers. That's impressive, but still approximately 12 million fewer than Emirates managed. SIA's group revenue was 19.54 billion Singapore dollars, approximately $14.3 billion, which is less than half of Emirates Group's revenue. SIA achieved a net profit of approximately $2 billion in that year, boosted by some one-off gains, a far cry from Emirates' $5.1 billion. In fleet terms, SIA, plus its subsidiary Scoot, has around 190 aircraft in service, including many smaller jets for regional routes, again, much fewer total seats than Emirates' fleet offers. One area SIA beats Emirates is load factor. SIA's passenger load was approximately 86.6%, higher than Emirates' approximately 80%. This indicates SIA runs slightly tighter capacity relative to demand. Also, SIA's product is top-notch and it wins many awards, as does Emirates. But purely in size, Emirates overshadows SIA. Emirates' revenue is nearly 3 times larger, and it carries 1/3 more passengers annually. Indeed, Emirates' single hub in Dubai handled more passengers than SIA's entire group across multiple hubs and airlines. Moving to Turkish Airlines, the Istanbul-based carrier is another global connector leveraging geography. Istanbul, like Dubai, is ideally located between Europe, Asia, and Africa. Turkish Airlines has actually surpassed Emirates in passenger volume, thanks to a huge domestic and short-haul network. In 2023, Turkish Airlines carried 83.4 million passengers, considerably more than Emirates' 52 million. However, many of Turkish's passengers are on shorter intra-Europe or domestic Turkey flights. In terms of long-haul international traffic, Emirates is still on par or larger. Turkish's revenue in 2023 was around $22.7 billion, similar to Qatar's and well below Emirates. Net profit for Turkish was reported at $2.4 billion in 2023, healthy, but again less than half Emirates. Turkish operates a mixed fleet of approximately 400-plus aircraft, including many narrow bodies, Boeing 737s, Airbus A321s, for regional flying. Where Turkish shines is breadth of network. It serves more countries than any other airline, over 120 countries. But financially, Emirates generates more revenue and profit on a smaller passenger base, indicating higher average trip lengths and yields for Emirates. ASK's RPKs, capacity and traffic in kilometers, would show Emirates near the top globally because nearly all its 52 million passengers are flying intercontinental distances. So Emirates' RPK, revenue passenger kilometers, a measure of traffic work done, is enormous, likely putting it among the top 3 airlines worldwide in RPK. Turkish, with many short flights, might carry more people, but rack up fewer total passenger kilometers. It's a quality versus quantity difference. Emirates focuses on long-haul volume and premium yield. Turkish has high volume, including shorter segments and lower fares. Now, consider the US Big Three: American Airlines, Delta Airlines, United Airlines. These behemoths operate large domestic networks plus international flights. In pure passenger numbers, they dwarf Emirates. American Airlines Group carried about 200 million passengers in 2023, combining mainline and regional affiliates. Delta, approximately 180 million. United, approximately 145 million, estimates. Those figures are 3 to 4 times Emirates' count. However, those US numbers include a huge proportion of short domestic hops. When we compare revenue, Emirates surprisingly holds its own. Delta Airlines in 2024 posted record revenue of $61.64 billion, leading the pack. Delta's global network and premium focus give it a revenue edge. American Airlines had $54.2 billion revenue and United $57 billion. Emirates Group's $37.4 billion is smaller, but not by an order of magnitude. It's about 65% the size of an American or United. In profitability, Emirates outshone the US giants in 2023. Delta, the most profitable US airline, recorded about $5.6 billion pre-tax, approximately $4+ billion net. American Airlines netted only $822 million in 2023, a slim margin of 1.5%. United made about $2.6 billion net. Emirates' $5.1 billion net beats them all, making Emirates likely the world's most profitable airline that year. Indeed, industry observers noted Emirates overtook Delta in absolute profit, an astonishing feat given Delta's massive operation. This highlights Emirates' efficiency and high fares on long routes. It simply prints more profit per passenger than most airlines. The US carriers still carry many more passengers and have larger fleets, approximately 900 aircraft at American, approximately 800 at Delta, etc. But Emirates' global reach and premium revenue allow it to punch above its weight in financial outcomes. Looking to Europe, the comparison is equally striking. Lufthansa Group, which includes Lufthansa, SWISS, Austrian, Brussels Airlines, etc., is Europe's largest airline group. In 2023, Lufthansa Group had 123 million passengers, more than double Emirates. Group revenue was €35.4 billion, approximately $38.6 billion US dollars, virtually the same as Emirates Group's $37.4 billion. So Emirates Group's revenue is on par with Lufthansa Group, which operates 5 passenger airlines and multiple hubs. However, Lufthansa's profit for 2023 was about €2.7 billion operating, approximately $3.0 billion, with net profit around $2.5 billion, roughly half of Emirates' profit. In essence, Emirates from one hub in Dubai is matching the revenue of the entire Lufthansa multi-hub system, and doing so with higher profitability. That underscores the potency of Emirates' model. Similarly, IAG, parent of British Airways, Iberia, Aer Lingus, had revenue around €26 to €27 billion in 2023 and net profit approximately €1 to €2.7 billion, depending on exceptional items. Emirates handily exceeds IAG's revenue and profit. Air France-KLM Group is smaller still, €26 billion revenue, €1.1 billion net in 2023. So among European peers, Emirates Group now likely generates the highest revenue and profit of any airline entity. Lufthansa is the closest competitor in revenue. One more peer, Etihad Airways, also in the UAE, Abu Dhabi. Etihad is much smaller than Emirates now, carrying roughly 10 million passengers and focusing on a boutique strategy after scaling down from heavy losses pre-2017. Emirates' scale is an order of magnitude larger than Etihad's today, so much so that Emirates often cites its distinction from the rest of Gulf carriers. Finally, a rising challenger, Riyadh Air, Saudi Arabia's newly launched airline, and the expansion of Saudia. Saudi Arabia's Vision 2030 includes launching Riyadh Air to replicate some of Emirates' connecting hub success via Riyadh. Riyadh Air has mega orders, up to 72 Boeing 787s, and plans for A350, and aims for 100+ destinations by 2030. This could directly compete for connecting traffic. Today, though, Saudi's airlines are far smaller internationally. Turkish Airlines and its new Istanbul airport are also major competitors in connecting east-west flows, now that Istanbul's hub can handle 90+ million passengers, with plans to expand beyond 120 million. Emirates will have to keep an eye on these as they encroach on the same markets.